Well, I'm going to the city and I'm gonna do a city show. And I know all my fans wanna learn how to make some dough. I've been cruising up and down for trades each and every night. And with my iPhone reclining, I know we're gonna get it just right. I'll get inside your mind, we'll have a real good time. We're gonna trade today, we gotta trade today. Go AskSlim.
Hi, I'm Steve Miller. Call me Slim. And this is the AskSlim Market Week. It's a look back at what happened in the financial markets in the past week, and a look forward to what might happen in coming weeks. And hopefully, lots of great ideas and opportunities for you throughout this show. Well, the stock market traded mixed last week as growth stocks surged and small caps retreated with the Dow Jones Industrial Average. The week opened softer as Tesla moved down and Musk said he was going to sell more stock. And then on the news that he had sold about $10 billion worth, the stock began to rebound. Tuesday, we saw a 30-point gain early in the market as Senator Warren said that she preferred Brainerd over Powell, and because Brainerd is considered the super dove, the market opened stronger on that news, figuring that could be some influences. But then retail sales came, and Walmart earnings and Target earnings, and all of this retail sales numbers that came out very strongly. All of a sudden the market got weaker. It was really about the action in the stocks in retail, as Walmart had good earnings. They beat, said their shelves are really well stocked. But the true story probably came out of Target, which, take a look at that chart, you'll see a classic island reversal as their earnings missed, and they talked about margins. And that may be the key thing for these retail stocks, as they try to maintain pricing and be competitive. But we saw that in Target, the margins are really starting to get squeezed by the higher prices wholesale. And we look at the XRT, that index does look like it's coming up to some important resistance. Midweek, we saw kind of the market go down early on Wednesday and then back up. Amazon said that it was talking about ending the use of Visa cards in the UK, and that weighed on Visa and started to weigh on the markets. We saw China ADRs moving down strongly as Baidu showed a big loss. Roku crashed 11% as analysts downgrade that stock. And we saw that stock a 55% move to the downside from its top, and that joins Peloton and some other stay-at-home stocks that have some considerable wreckage. Now, not all of those stocks have been moving to the downside. I've got more to say about that in a few minutes. So let's look at that actually right now as we talk about these stocks that are the stay-at-home stocks. And this is a very interesting chart put out by Bloomberg and Zero Hedge. It looks at the get out and party stocks, that's the recovery stocks, versus the stay-at-home stocks, that's the ones that benefited from the pandemic. And you can see here on the chart what it shows you is that this decline right over here is the relationship between those recovery stocks and the stay-at-home stocks. And as it moves down here, it reflects the fact that those stay-at-home stocks, those stocks that really blasted on the upside based on the pandemic, well, they're even doing it more, as you see. And the recovery stocks, well, this is the reflection of them as they relatively are way underperforming. Let's just talk about this a little bit more, because on the left side over here you see a list, and that is the pandemic stocks that we consider to be overpriced and overbought, and they've had huge earnings growths. And these stocks actually have, like Etsy was a stock that lost money and now is starting to earn money. The PEs have shrunk on some of these. as these stocks have moved up, but they are still what we consider to be massively overbought stocks based on our analysis of their relative pricing to moving averages. And you can see in here their PEs are just absolutely enormous. Etsy 80 PE, Shopify 100 PE. These are all forecasting forward PEs. DCXM 100 PE and Datadog 350 PE. These are extremely extended and extremely overpriced stocks. And while they have very strong earnings growth going on now based on the changes in the way people are doing business and the way they're shopping, these stocks are very susceptible to sharp moves to the downside. On the other hand, on the right side here, you see the pandemic stocks that crashed. And there's a bounce pending, we believe, for December. We say beware because these stocks still could be moving to the downside, while we believe that the stock market will have a decline into sometime in December. But that may be opportunities. We especially like PayPal, which is down about 35% off of its peaks. But Roku, Peloton, and Zoom, all of those, you could see these significant declines. And all of those are in a place where we think that they could have sizable upside bounces off of the lows that we see coming between now and sometime in December. So we kind of wanted to give you these shopping lists of the overbought ones that you could see here that really look like they're going to have some significant pullbacks, and the stocks over here that are in this that were in this stay-at-home stocks, work-at-home stock category that we think have been crushed and have potential bounces. So just wanted to share that list for you. And what you can see in here really is that the market is benefiting still from these stay-at-home stocks. You could put Nvidia and Netflix and those stocks that have held up really well also in that category. I didn't include them here because they're not as overbought. And have had some corrections. Not Nvidia, that's screaming up to the top. So this is kind of the shopping list. The ones on the left, the one I'd avoid, are the ones that I think offer short side opportunities, and the one on the list on the right of the stocks that may be bounceable, and you've got to really be careful with those stocks. So I wanted to share that as we talk about these stocks that really are, get out and party versus the stay-at-home stocks. And as we look at the Roku Crash this week, as analysts have downgraded that stock, but they're downgrading it 55% off the top. So that's, I think, was worthy of a discussion. As we got later in the week, Thursday was a very volatile day. Nvidia earnings were just great, as I said, and the stock spiked to the upside, and their guidance was very strong. Also, retail stocks moved up sharply as Macy's and Kohl's were giant winners on Thursday. On the other hand, Baba had a really bad day, Alibaba, as they had really bad earnings. The stock moves down about 12%, joining also Baidu with a very difficult time. Now, those Chinese stocks we thought were bottoming, and they still basically have. We love JD, and JD had a big bounce and isn't pulling back at all. And I think that these Chinese stocks are going to give also in December some potential pretty good upside moves. So that upside move that Nvidia sent the stock market up early in the day on Thursday, but then news came out that Manchin said he prefers Powell over Brainerd. And that would be, if Powell got reappointed, the markets may be disappointed because they want Brainerd in there, who they think will keep interest rates down low for a very long period of time. Now, Brainerd did, back in 2018, she was a little bit more aggressive in wanting to raise interest rates, so not exactly sure if they're right about that. But what they, I think it's important to mention that all of this machinations around these Fed heads, it's really so incredibly annoying to me because they're basically all out of the same mold. And we live in a world of financial tyranny. Remember, tyranny is when you take away freedom, and these the FOMC, the Fed heads here, have taken away the freedom out of the market. There are no more free markets. They're determining all valuations in here, and no investor really knows what values of the markets are, so they keep piling into these stocks, and eventually they get their heads blown off. Well, as we've seen in a lot of these stay-at-home stocks that were highly speculative as they moved up, and a lot of things that we see now. So this, I'm just going to call the Federal Reserve the leaders of financial tyranny. Still staying here on Thursday, the Nasdaq. That was a strong day for the Nasdaq, as Apple talked about they were looking at moving into production of fully autonomous cars by 2025, and that stock rallied 4 points. Amazon exploded to the upside as they came up with a Starbucks deal and opening up a New York City store. But Goldman Sachs picked them as their internet stock for 2022, and both stocks got upgrades from JP Morgan also, and that helped them on Friday and is helping the stock market after it had this a volatile morning for the stock market. Friday, the market moved up early in the morning, as it was likely that President Biden's BBB will come to a vote in the House and likely pass, though it's got a much tougher time in the Senate. And the CBO scored it, and they're trying to spin it positively, but the CBO says that the first 5 years will have a $750 billion addition to the deficit, and then they talk about the second 5 years of some recovery of that through enforcement out of the IRS, which is just bogus, and they're never going to be able to recover that. So they'll probably pass this in the House, but they're going to have a real hard time with it in the Senate. So here we're looking at Friday with COVID-19 raging in Austria and really picking up in Germany also. So while the market was strong early in the day on Friday, up 20 points, it fell to minus 17 in the S&P 500 overnight, as Austria said they're going to lock down for maybe 3 weeks, completely locked down basically, and Germany says they're also thinking about it. But the tech stocks again saved the market again on that JP Morgan positive comments, and the S&P, which was down, basically is trading right around unchanged. But we have this hugely mixed market that we've had all week long, where the stock market is, or they're moving from one index to the other, but specifically this week we've seen the NASDAQ and the S&P 500 firmer, but at the same time the Dow and the Russell quite weak. And we're seeing that here again as we look at a day here on Friday where the S&Ps are slightly up, the NASDAQ is up sharply, and the Dow Jones is down sharply, like about 200 points. So really a lot of mixed market. And, that's reflective of some things that I think are going on in this market that has this market stalling right now. The stock market did peak on November 5th with the S&P 500 at 4718. Now, it's only about 9 points below that right now, but it's been in this area now for over 2 weeks, and it really does look like there's a churning and stalling going on. And you really have to question where the fuel is going to come from to keep this market moving to the upside. I want to show you another chart right over here that I think is important. This is the source was advisoranalyst.com, and this is the major index's short interest percent of float. Where you look at the S&P 500, the Dow, the NASDAQ, the Russell, and the picture in here really shows that the short interest has collapsed. It's the lowest in decades. It was low, but now it's really low. And it just shows you that what's been helping the market move up is all that short covering, or people are really afraid to be short. And you got to wonder if the stock market is running on empty when you look at that. Shorts are not there to help the market up. We saw the short interest that was pretty high in some of the meme stocks really helped those stocks move up. But now it looks like the short interest overall is really a negative condition for the stock market. Our work says that the stock market, which is quite a mixed market right now, we see money moving out of small caps, money moving out of energy and healthcare and financials right now, and into those extended growth stocks and those pandemic stocks that we talked about that are so overbought. We think this is a warning in the market, and that overall, the peak that we think we're going to see in the stock market and a bear market to follow, we think comes in the first quarter of next year. So we don't really think that we've seen the highs in the stock market. But over the next few weeks, and I'll talk about this in the review at the end of the show, we think that there is risk. And we actually may get another one of those bungee jump markets where you get a quick move to the downside of some significance, and then you get a quick return back to the upside. It might actually look like a decline sometime into mid-December and then a rally in towards the end of the year and into January. If we do get that formation, of course, we'll put a buy list together for our members of things that we think have a good possibility of moving back up into the early part of next year. So watch for that. Watch for that bungee jump, a quick downside move of some significance just over the next few weeks. For this week, the stock market, we'll call it mixed. The S&P 500 and the NASDAQ up. The NASDAQ the best, up about 2%. The Dow Jones and the Russell down. The Russell the worst, down about 2.5% on the week. Bond market 30 years around unchanged, but 10-year yields fall about 5 basis points. And there is the slight steepening back in the yield curve that had been flattening. The gold market slightly lower, silver the same. However, that's with a very strong dollar out there. And when you get that kind of action going on, if you get the dollar moving down of any significance, I would say that you could get gold and silver popping pretty good to the upside. Now, copper, Dr. Copper you might call it, because it's reflective of the economies, that tested support way down at 420. And we think that's going to happen again. So we don't really like copper right here. I think silver and gold is much better right now. The dollar, well, it's been very strong. You could say it's on the safety bid, or maybe the rest of the world is worse than the United States. And the 0.8% gain that we saw on the week moves it up to our target. Now, back when it was trading in the 93s, we talked about getting up into the 96 in this time frame. In that area, it's gotten over that, and now we're even looking at it getting over 97. So we've been bullish on the dollar. I think it still has upside in there. At the same time, we had warned that the energy markets were topping. The gasoline market, unleaded gasoline, had topped first, and that was giving a warning there. And now all of the energies now look negative to us. So you might get some rebounds in there, but we think the cycle patterns do reflect negative conditions right now for the intermediate term. And that means that rallies should be sold in there. And I want you to, if you don't watch our Future Speak show where we do all of this deep analysis on 26 different contracts, do consider being a member, level 2, 3, or 4, and you could try actually that with our special I'm going to show you of the holiday specials that are coming up in just a few minutes in the show. Also coming up, we're going to show you a preview of the gold stocks. Avi does an amazing job on that. You'll see that. I'm going to review Bitcoin, and then I'll show you that holiday special where all of our 5 levels are just hugely discounted. And then I'll give you the intermediate view of the stock market. I'm going to show you our multiple time frame proprietary indicators. So that is the beginning of this show. And I want you to make sure that you go to our website, AskSlim.com, and explore what you see there. If you're new, you could become a free member and learn a lot about what we do. If you're watching this on YouTube, please do subscribe to the channel. And if you like this show, give us a thumbs up and click that notification bell. that you'll be told, get notifications when we post videos. And again, I'm going to say, please do give us a thumbs up because that does help us on this video. On Twitter, follow us at AskSlim.com. And for all the questions that you might have on our memberships, the specials I'm now going to offer, or all of our huge educational and analytical offerings, please do write to Matt at AskSlim.com. All right, every week we do a preview at this time where we show you a couple of stocks or indexes out of our member section, which is for level 2, 3, and 4. We have a huge video library of now over 600 videos, I believe, and you can learn a ton from the work that we do, and Arvy's really good at it. So he's going to show you right now a preview of a couple of stocks in the gold category, FNV, which is Franco-Nevada, and Barrick Gold, GOLD, and you're going to find his teachings to be just fantastic.
So this is FNV, and what you'll notice here really right away is that this is really a positive cycle forming in this dominant low right here with a higher cycle low relative to the prior low. What we would look for, given this overall positive structure here and the bullish outlook we have on gold, is also really further upside. We have an intermediate 78.6 right here at around 156. We will look for that area to get taken out on the upside and then to look at that old high possibly up around this 163.79 level. So this is really a very solid pattern in FNV, still early in this intermediate term rising phase here on this dominant cycle as well as the minor cycle. So this has likely still meaningful upside here in FNV, and this is one that we'll be focusing on for our trade ideas for our level 3 and 4 members over at AskSlim. So this is Barrick Gold here, and you can see this has been in this really picture perfect downtrend. I'm just going to draw a trend line here. This is really a picture perfect downtrend that we've been in. We are still in a downtrend with lower cycle highs, right, and lower cycle lows relative to the prior low. So this is in a bearish weekly cycle structure as we are looking at it. Now, in the context of a bearish weekly cycle structure, you can get rallies, and that's really what we are in right now. We're in a rising phase and an overall longer term downtrend. We are in this rising phase with our GOLD cycle pushing up as well as the GDX cycle pushing up, looking for a move likely into this zone from the 61.8 to the 78.6, so that comes in around 22.30 to around 23.70. Somewhere in that zone is where we would look for GOLD to fail. But in the meantime, still looking for some further upside here and would watch for little pullbacks here to then set up higher given where we are in this weekly cycle, which is still early and rising. So that's the overall picture here in gold. This is also a heavyweight in the GDX, so this is really giving us some clues that if we really want to see a more meaningful rally in the GDX, we would really need to see both NEM and GOLD really start to do a bit better. You can see this is acting a little bit better over the past few weeks versus NEM, which I'm going to jump back to. This is really not doing much. This is giving at least a little bit of a rally here, so this is acting a bit better. We do want to see this push higher up, and that will obviously give some legs to the GDX as well.
All right, great work by Arvy. If you want to learn more about cycle analysis, please go to our main page, click on the navigation bar that shows workshops, and click on that cycle analysis workshop, and there's a lot of information there on that page for you to see. So great work, Arvy, as he looks at the gold stocks. So you get a good sense for where those stocks are right now, and that we're looking favorably, at least for the near term, in the gold and silver market, and there could be some upside trades that we're looking for there in that market. So really, really good work. All right, so now I'm going to look at something a little bit different. I want to do a review on Bitcoin. Many of you have heard my attitude on cryptocurrency and Bitcoin, that this is just part of the huge speculative bubble, everything bubble that is going on right now. But at the same time, I still look at it very agnostically. And when the bottom was very clear after it had made a trip down to under 29,000, we were positive and we thought that it would be going up. And now the conditions are such that it looks like it's in a time frame where there could be more downside. So I wanted to review this, get the pricing in there for you to see support, resistances, momentum conditions, all of those as we look at Bitcoin. And we'll start out by looking at what is really a blank canvas for us, because our work is extremely artistic. It is an art form, and we just take the blank canvas and we put all the information on it one little piece at a time. And when we do that, we end up going from a chart that looks like this to a chart that looks like this. Yes, that may look very, very busy to you, but at the same time, there's a ton of important information in here, and I'm going to share that with you. First thing I'll say is that in an update right now that there are over 11,000 cryptocurrencies, including all the altcoins out there. That number grows. There are unlimited supply. There is no scarcity in the cryptocurrency market. You could say there's a limit of 21 million Bitcoin that will not be hit for 100 years. But that doesn't matter, because there's another one that comes and steals the thunder, as you saw happen for a while with Ethereum going up while Bitcoin was lagging. So the information that I'm going to show you right now is purely technical. No matter what my attitudes are, we always look at things agnostically. So let's take a look right in here so you can see these formations, so you understand what we're looking at. This is a cycle bracket. This is the way that we see the average periods between important cycle lows. When you get this big dominant cycle, often you have a minor cycle or more. There are many, many cycles that live in here, but you have to go down to different time frames, smaller time frames, to see those. And I'm going to show you the daily time frame also. So you have this cycle right in here. This is called the harmonic family, made up of these two minor cycles. And you can see this right over here. That minor cycle comes down. You get a failed rally right over here. And when you have a positive cycle like this one, and then a rally that fails and takes out the low, it's negative. And it tells you that with momentum right over here, and this is the reversal scout, this is a proprietary indicator. I'll show you this on some other charts in a moment. This tells you the momentum is turning down and that this is an important peak. And it's likely to go down into the nesting period right in here, which is a range of time either side of the ideal low. So you could see it declined perfectly into that time frame. Then you had the next minor cycle right in here that bottomed, positively configured the low way above where this low was in the support beautifully. And we had looked for a further decline to 38.5. But then on October 1st, we said it was revised. No longer were we looking for that. And then we were in the next rising phase. And you see that got you up to a new high, around 69,000, which is a couple thousand, 3,000 above where it had gotten over here. And momentum in here, you could see, is still positive. This yellow area right over here is where the period of risk comes in, just as it did right over here and right over here, that previous one. So we expected a decline during this time frame. Now we downgraded it today based on the magnitude of decline in here. So we're looking for to move down to supports. This support right over here is around 54.3. The top of this support, which is a 38.2% fib extension, is at right around 53.5. The middle area right over here is at about 48.5. So that's what we're looking for, is a decline down to 53.5 to 48.5 sometime into the projected December lows. Now, where do I get that projected December low? Well, I get that off of what we're looking at right over here. And each of these nesting periods shows you the time range for those lows, which is very clear. Again, I want to reiterate that our analysis is made up of cycle analysis, and we add to that momentum conditions based on either using the reversal scout or the slim ribbon, which I'll show you, And we also look at important support, resistances, and projections that you see up here. So it came up here, got very close to the 127%, rejected right there, as you could see, with that reversal bar, and is now in this corrective period, looking like 53.5 down to 48.5. When I look at it here on the daily chart, you could see that, well, this is that big cycle right over here that comes off of the weekly chart, which I superimposed over this. This is that nesting area right over there that I showed you where the lows are likely to come. And there are two cycles that we're looking at in here that are out of phase. In other words, this blue dashed right over here could give you a little earlier low. This is early in December. This one over here is more like mid-December. So we're looking for a potential rebound, which you see it's trying to do today, to get into these sell zones. So it's a short-term sell zone that we believe that if it gets up into here, which is over the area of about, starts at around 60,700. It gets up here to about 63,800. So right in here, when you get over 60,700, we consider that to be a sell zone. The probability of rejecting and coming back down for active aggressive traders is very high. So that's where the area where the resistance are, that we think it would then be moving down to the downside again in some significance. Looking at this in the side by side, you can see in here that here's the condition for that correction and the period of risk right there. Here's how it extrapolates over onto the daily chart. The probability is that if it gets into that, if it rebounds up, it would happen at a time frame where there's likely to be another decline, and that decline getting down into these supports between 53.5 and 48.5 that you could see right over there. I want to blow up this daily chart again for one more second and show you the slim ribbon. So this is the slim ribbon momentum condition. See that green arrow right there? And as it begins to expand, it tells you the momentum conditions are getting stronger. When it begins to narrow, it shows you the momentum conditions are weakening. The slim ribbon PO is the signal indicator right here, and you can see when it turns green, it's the reflective of the slim ribbon. Here you got that positive signal right over here, which was beautiful and began to move up. So you had all of this positive condition through October and into November, and right now it has neutralized. As you see, that turns blue and the slim ribbon crosses over on itself. This is very important. We expect that this is going to go red, and you'll see this turn red over here, and that will give you this pretty good period of risk. When it does turn red, you'll have a reason to be even more confident to sell the bounce and look for more on the downside. So overall, what this shows us is that it's fairly likely that this period of risk is here for the Bitcoin market, that it lasts sometime into December, but then again, we'll get into a favorable period where we have to see if it can test that 69,000 again and get above that level. So this period of risk only goes into December, and then we get into a more favorable period again for the Bitcoin market, where we believe it will test those highs and give us some indication whether it has any power left at all. My bigger picture analysis in there, which I'm not going to share right now, I'll just simply say, we believe 2022 will be a major shakeout year for all of the cryptocurrencies, with some very severe declines in there. There's a lot of you people out there that are married to your Bitcoin position or cryptocurrency positions that are going to completely disagree with me on that. Well, you heard my warning. That's my update on Bitcoin. Announcing this very, very important time, the annual AskSlim holiday special, Give the Gift of AskSlim. We do this only, of course, in this holiday period, and this is the time frame where you can try AskSlim in any of our memberships, level 2, 3, 4, and 4 plus, at the lowest prices of the year. And what's special about this is that they're 3-month memberships, non-recurring. You don't have to worry about buying them and then getting charged again in 3 months. They're just not that kind of membership. This is for you to give a gift to someone who you know loves trading and investing and wants to learn from our amazing team of 4 analysts now that understands as well as anybody in the world this style of analysis and does amazing teaching, which I think you're going to experience. You can even give the gift to yourself. It's great for first-time members for AskSlim, or use the special to try a higher level membership for 3 months. Also, remember, it's non-recurring. You won't get charged again. And what's amazing is that, of course, you have to figure out your own, what this means to your taxes and how you can deduct it. But we're going to even make it less expensive for you, because we're going to give you a bonus gift, which if you sign up, we're going to send you back an Amazon gift card to make it even less expensive. For more information, you can write to Matt at AskSlim.com or watch for our other announcements that you might see out there. So let's talk about these specials. For Level 2, Level 2 includes our intraday SIR chart stream, our SIR stock index report daily snapshot, our Future Speak show, which is part of our video library, where I review 26 futures contracts very extensively. It's about an hour and 15-minute video every Wednesday. You get our whole trader library, over 500 videos. You get our interactive trade planning worksheets and our amazing Momentum Tracker app for longer-term holders. This is on special for a very sharply reduced 35% off for only $114.75. So it's regular $59 a month. You're going to pay $38.25 a month, but we're going to give you a $20 gift card too. So that's going to reduce this down to about $31 a month for all of that we just gave you. But there's so much more here. Level 3 on our holiday special offer, 35% off again. So that is $232. That's only comes out to $77.33 a month, which is compares to the normal $119 a month. Plus, we're going to send you a $50 gift card. So that makes it only $60 a month that you have to pay for this absolute non-recurring special. It's going to include our chart streams, which I'm going to show you in just a few moments when I look at the S&P 500, our daily trade ideas, our bull and bear ranking systems with the 84 best traded symbols, plus everything that's in Level 2. So you get a tremendous amount here for this amazing price at the end of the year. Give this gift to somebody, or give the gift to yourself. Or you could choose our top tier on this special offer, a 35% off for 3 months. It's $303.75. It's normally $159 a month, but that will now be only $101 a month, which is an unbelievable deal. We're going to give you a $100 gift card in there. So what does that make it? Only $68 a month in there. And our Level 4, this is the top tier, which is just no, I don't think anybody offers anything like this. Everything that we offer, every single bit of our analysis, you get all of our chart grids with all of our analysis on there that you get in the standard Level 4, and everything we have in Level 2, 1, 2, 3, and 4. But you're also going to get to ask us for our custom chart requests twice a week. So if you have something that you want to do cycle analysis on, or something else, or you want to see it, or you want to share one of your charts, you want to ask us an important question, you can do that. And that's normally for that very personal service that we give, $465 for 3 months. We're going to reduce it from that regular $232 monthly to $155 monthly. Plus, we're going to give you a $150 gift card. So it's only going to be $105 a month for Level 4 Plus. There's only 20 spots available for Level 4 Plus. We can only handle a specific number of people for the requests that we get. So you get 2 custom requests per week. You get our AskSlim daily and weekly charts for the Thinkorswim platform. If you want to become a Thinkorswim member, please sign up and open an account through our website on the main page. All of those charts include our cycle analysis, timing analysis, key levels, projections. You get access to the full archive of all of the level 4 member requests. So not only when they request something for themselves do they see it, but also you get access to that. And there are many, many requests every week, and you'll see all of that custom analysis. You'll get exclusive trader support from our team, general questions around trading issues, trade planning, and chart analysis, and full membership access to everything in level 2, 3, and 4. All you have to do is go to the top page at AskSlim.com, and you will see in that main page right there that you can sign up just by clicking right here on that save 30% or more. It's going to take you and give you all of the information that is included in our special right here, and you'll be able to see each of these gift options that we have for level 2, 3, 4, and 4 plus, and you'll be able to buy that gift just by clicking on any of these. If I click right over here, you'll see that cart come up, and then you just enter the recipient mail in here, and you will be, and it can be your own mail if you're giving it to yourself. So that's how you sign up for this. All of the information you need is right here. This is just an unbelievable way to give an important gift to somebody that you know that is interested in the stock market or the financial markets, or to yourself. That's the Ask Slim specials that we have here, and it's Give the Gift of Ask Slim. Again, reserve your spot now, or write to Matt at AskSlim.com if you have any issues with it, any questions that you have, if you have any problems signing up. Do that now. This is only going to be available through the holiday season, and it is the lowest prices that you'll see from us ever. Thank you very much for listening to that, well, pretty long special list that we have. This is my analysis of the stock market for this week. We're going to look at the S&P 500, the SPY, and then we're going to take a peek at the looking at our multiple time frame indicators that's on our chart streams that I think that you're going to find quite interesting. So let's take a look as we switch over to our weekly chart. I'm going to move off of Bitcoin here, which I showed earlier in the show, and over to the weekly chart of SPY, and just come right in here. So last week we showed the same chart, and on that box, on that green box in the bottom, we talked about the S&P 500 conditions. Now those conditions have barely changed because the market has barely moved. And what we see here is that we have positive momentum conditions, positive cycle patterns, and our phasing. In other words, where are we now in that cycle? Well, we're in rising phases in the intermediate and the short term. What's a little bit different in here is that the short term has the rising fade, which was moving down, and we thought it was bottoming or getting ready to bottom. The bottom was completed, and now we're about 6 days off of that low. However, the Russell is the one that's acting much weaker, and that one is giving us a lot of suspicion about what the condition of the market ultimately is. For those of you that are looking at this for the first time, these are cycle brackets on the bottom. They give you the ideal lows. And when you have two of them coming together is where the biggest downside risk is. And when you have a market that refuses to tick down, there are hugely strong momentum conditions that are playing on the market on the upside that come from longer time frames, specifically the monthly charts. This is a picture of an extremely strong market that goes basically from positive momentum here on the reversal scout to basically just flattening out during corrections and then moving up again. Little dip right over here on this little stronger downside move. And when it came down through that 78.6%, as I said last week, then that gave me a warning that it was the odds favored it not being able to move to a new high. The probability of getting to a new high was only about 30%, and it was able to do that. So now it's stuck in this fib confluence right over here. You could see 3 weeks that we've been in there right now. And as I said in the beginning of the show, we have a very mixed market where we have money beginning to move out of financials and healthcare and energy, which is topped, and specifically moving sharply out of the low cap stocks and moving in, again into another surge in the very extended growth stocks and those stay-at-home stocks. I showed an illustration of that again also in the whole show. So if you're only watching a clip right here, then please do go watch the whole show. There's some really informative stuff in the beginning of the show. So here we are stuck right over here. When we get into those yellow corrective phases, that's when the probabilities increase of sizable declines. This is the one in the pandemic in here, moving down to those nested bottoms. This one over here was about over 10%. This one was close to 6%. This one only 3.6%. The average is really more like about 6% during these things in a bullish market. It's much deeper in a negative market, which would give you about a 250-point decline in here in the S&P 500 or a 25-point decline here in the SPY. We're looking for that in here, and that points into this period in towards mid to late December right in here. And we believe, as we said in the beginning of the show, that there will be kind of a bungee jump in here where it has some brief period where there's a lot of selling, but then you get into the next rising phase, which occurs over here. And I'm just going to show you that right over here, where this then would then be moving up after that, and then further advances that take you into the beginning of next year. So that's that next cycle right over here, and that's why we look for the peak in the market in Q1 in this next cycle that you see over there. So we're looking for a decline in here and a bungee jump to the downside, and then coming back up and popping up. And that would give an opportunity to buy some of the stocks that may be on your shopping list in here. So that is a look at the SPY. Now I want to look at the stock market conditions a little bit closer. Here's the special offering, and I'm going to go over here to this page, which is the AskSlim chart streams. These are amazing. We essentially broadcast our proprietary indicators in an intraday in the S&P 500 and the NASDAQ and the Russell on 15-minute charts. And these over here, these 10 other charts, are multiple time frames, 4 different time frames with our proprietary indicators. And I'm going to show you what those look like right now so you can get a good sense for the conditions of the market as we look at it. Here is SPX, the S&P 500. And what I'm going to do, see that arrow shows up, and I'm going to click on that, and I'm going to run this. And this now becomes a live chart. So what we're looking at, and it kind of darkens the bottom of the page when I move my mouse, but the very left little chart, skinny one you see there, is showing the weekly chart, which shows upside momentum is strong. The second chart for the S&P 500 is the daily chart, which shows our cycle analysis in there and shows the likelihood that we're still going to see some upside in here before the corrective process takes a hold. The next chart is the 2-hour chart, which is right over here, and that gives important analysis also, which shows that momentum conditions are still moving up, both in the slim ribbon and the reversal scout. And now, as this SPY moves up, SPX moves up, it's moving into what we call, for the 15-minute chart, through the resistance there and into the acceleration zone, which could get you a pop yet today on the upside. So some very good strength that you see there. I also want to show you that you get our, on the bottom here is the slim ribbon PO and those positive signals on the 2-hour and the positive signals there on the daily and the 2-hour. If you look way at the bottom over here, you can see that is the option bias indicator. It's way at the top, those green dots. That is P3. That is the most positive it can be. And over here is the AskSlim market condition indicator on the bottom, which keeps darkening right there. And that is at a very bullish condition also. So looking at the S&P 500 on the SPX, that looks really positive. I want to switch over though, and I just want to show you to see the value of looking at the different indexes, and we'll just look at the Russell also, because the Russell has turned weaker, and I'm going to go live on these charts. Again, we're broadcasting these, and if you become a level 3 member, you'll be able to see our live chart streams. and our SIR snapshot with the 15-minute charts is for level 2. So this is different, and you can see in here what's going on is that you get this downward turn in momentum here on the daily, and potentially setting up a much weaker cycle pattern in here. But look what happened here is it turned over and momentum went negative. You could see that on the 2-hour chart where this has been negative, and this is going up on the S&P 500, but it's going down on the Russell. And if you look at the 15-minute chart over here, that failed and is now moving down, as you can see, versus the S&P 500 moving up. So if you're a pair trader, man, does this give you fantastic information. Also, you could see on the bottom left over here, you'll notice those little orange dots. That was a signal on the option bias indicator that it had reached the condition of extreme overbought and would likely reverse. And that was absolutely perfect. You can see the market condition indicator on the bottom here starting to roll over. So overall, what this shows is a much, much weaker condition for the small cap Russell than I showed you in the S&P 500. The overall story, when I look at this, is a story of the stalling here in the stock market, even though it's trying to move up and you're getting some movement up. It's getting lifted by Apple and Amazon that got upgraded today, positive comments by JP Morgan, but the market is stuck and stalled right over here. So we're really looking for just a matter of days before the market goes into this correction that we're expecting. It would likely be a small correction. We'll just look at something like 4.5% to 6.5%, and that setting up a condition where the market is likely to be moving up again into the first quarter of next year. That is a look at the SPY, a look at the stock market. I hope you found it incredibly informative when you've looked at this. If you want to get our proprietary indicators on those live charts, please do become a level 3 member. You can use the special that we put out today, which is to give the gift of AskSlim, which is an amazingly low price for you to try it in a non-recurring membership. So I think you'll find it absolutely fantastic. Please do go to AskSlim.com, subscribe to all of our, to any of our offerings that we're giving. You can even become a free member and get some sense around what we do. On YouTube, subscribe to this channel, click the bell so that you get notified. Give this video a thumbs up and watch our other member videos in the playlist there to get some ideas of what we offer. On Twitter, follow us at AskSlim. Any questions on all of our memberships, our specials that we're running right now, and our huge offerings of education and analysis, you can write to Matt at AskSlim.com. That's it for the show. I want you to be unbelievably careful. It is so crazy out there. And I'm always wishing you great trading.
Well, I'm going to the city and I'm going to do a steady show. And I know all my fans want to learn how to make some dough. I've been